Those NYPD officers just crushed this cone here. But what's up, everybody? We'll get started here in a minute. Happy Sunday. Hopefully you are all rested and ready for next week. It's going to be a pretty big week. We'll talk about it tonight in our Markets Outlook stream. But right now we are currently walking down 57th Street and 5th Avenue. This is the Tiffany & Co. building. And this is the Louis Vuitton store. Yeah, that's another thing. So today the city is very busy because of the Trump rally at Madison Square Garden. You know, I think it's still going on, but we may be able to see a lot of that getting out. At least I think it's still going on. I'm not too sure. I really wasn't paying attention to it all that much, frankly put. But as we head down towards 34th Street, you can pretty much guarantee there's going to be massive traffic. So we'll get started in a moment. Thanks for joining. Happy Sunday. But this is the scaffolding facade on the Louis store. Very cool. Now, over the weekend, Bitcoin caught a little bit of a bid. We'll see if they can hold. I think the daily candle closed just about an hour ago, so we'll see. But how's everyone doing? How was everyone's weekend? Hopefully you were all well rested. We'll talk about futures in a minute. Professor Dario, welcome. Brian is here. DC322, Alan. What's up? It's a very, very hectic weekend in New York. Lots of security, lots of craziness. Reggie 44, this is just nervous until the election. Well, the election is what? In less than a week now? I can't even believe that. Pretty insane, pretty insane. DC322 says, I did vote, by the way, yesterday. Very cool. That's awesome. Doc7 says 9 days away, 8 days away for the election. It's just, I can't believe how fast time is going. I really, really can't. I know everyone always says that, but it honestly feels like yesterday that we were doing the New Year's Eve live stream 2023 into 2024, and I was writing my piece, like the outlook for 2024, and now we're already planning for 2025. I mean, things are just, I don't know. Ever since I turned about 25 years old, life has just been, it's just been going by. It's strange, not to kind of go off on a tangent, but before we get started, I always remember in middle school and in high school, it seems as if every single period took like 10 years, right? A 1 hour math class was like 20 years. A summer vacation seemed like forever, but now everything is like, you know, a week turns into a month, especially if you have deals working and it's, the whole year is gone. It's insane. But anyway, good evening, everybody, and welcome back to Walks in Wall Street. I guess before we get started, let's just do a quick audio and visual check in the chat, because I did make some adjustments to the audio. We have some new adjustments to the mic, so hopefully the audio is a little bit better tonight. So let me know what you think, and then we'll get started. Once again, if you're just joining us, we're going to head down towards 34th Street, Madison Square Garden, Penn Station tonight. Guy Amps, audio is good. Emma, what's up? Caddy T. This is a really good shot at the top of 53 West 53rd Street and the Crown Building. Really, really nice. Anthony Torres is here. What's up? Hello, Tom. Thanks again for your videos. Love them. Appreciate it. Cynthia's here. What's up from Orange County, California? Solo Flyer says MSG is clearing up. Fantastic. Patient Lobster from Israel. Good to see you. Hopefully you had a good weekend. Matt says yes, as we get older, time goes fast. Definitely does, man. Definitely does. Well, let's go ahead and get started. Good evening, everybody. Welcome back to Walks on Wall Street. Today's Sunday. What is it, the 29th, 28th, something like that? 2024. We are almost at the very end of October as we make our way through the quarter. We have November on the horizon, December, and then that's it for the year. We're going to start to plan for 2025. But talking about 2024, the market is on track for a unbelievable year. Talking about the S&P 500. Now, to quickly review, in 2023, the S&P 500 closed up just over 23% on the year for 2023. And even though there's about 2 months left in the year, assuming everything stays relatively the same, no guarantees, the S&P is on track to be up over another 20% in 2024. So it's possible we could get 2 back-to-back years of 20% plus returns on the S&P. That's unbelievable. And assuming, and again, there's a lot of moving parts. We have the election in 9 days. So a lot of uncertainty, a lot of things can happen. But assuming everything stays relatively calm, this is going to be one of the best presidential election years for stock market performance in U.S. history, which I'm sure all investors should be really happy about. I know I am happy about that. It's crazy to think, 40% returns over 2 years potentially. It just really drives home that point that it's so important to invest your money, right? It's great to focus on, building a career where you can consistently over time, increase your income. But as you start to see these returns and look at a compound interest calculator, it's very, very difficult over time to out-earn your investments, right? We always talk about the Peter Lynch quote. He was actually speaking, I think this was in front of Congress, I forget. Those of you who don't know, Peter Lynch was the former mutual fund manager for Fidelity's Magellan Fund. And he says, look, corporate profits in America, generally speaking, tend to go up about 8% a year, which means the market ought to double every 12 to 13 years, right? So the U.S. economy, assuming, right, we have positive GDP growth, assuming innovation never stops, companies need to raise money, they go public, they hit the market, they grow their earnings, they grow their sales. We get to invest in America's great companies that grow their earnings over time, and the market is a compounding machine, right? It really, really compounds out your wealth. And it's more important than ever to really focus on that, right? It's not to say that the market can never go down. That's not what we're saying. But with all of the rhetoric, particularly around the election cycle, that's meant to scare people, right, on both sides, right? The right-leaning media, the left-leaning media is meant to scare and panic people, and that can keep them out of the market. But it's important to be steadfast, focus on GDP growth, focus on corporate earnings, and this market is akin to one of the strongest markets I've ever seen in my life. So keep that in mind as we move through the election cycle that should end in 9 days, please God. I'm sure everybody, both Democrats and Republicans who are watching this broadcast, are kind of relieved that it's almost election day, that it's going to be over. I'm just sick of seeing all the political ads. I'm sick of, people just bickering and arguing over politics and social media. I think about maybe 2 months after the election, all that's going to die down, which should be quite nice. Anyway, moving on from that, it's going to be a big week. Major week on Wall Street. Magnificent Seven. That is the word or the phrase for next week. We're going to hear from Alphabet, or Google, pretty much all of the major tech companies. We're going to hear from Amazon, ticker symbol AMZN. Now, as we focus, on these major tech companies that are going to be reporting, 2 companies in particular, Amazon and Alphabet, we're going to have a hammer focus on their cloud computing units. So we'll wait till the rickshaw guy goes. This is 50 Central Park South, by the way. This is the Ritz-Carlton Hotel. This is a beautiful hotel right on Central Park South. But Alphabet's going to report, obviously Google's Google Cloud, and then Amazon's AWS cloud computing service. Those are the real 2 growth drivers of those businesses, and it will also give us a clue in on the demand for cloud computing, AI, data center, and the like. So one thing I'd like to note about Google before we get started and I say hello to everybody in the chat, Google's Google Cloud is now profitable, which the last 2 years that we were doing this live stream, all the analysts on the street would really kind of pick on Google that the cloud computing units, hemorrhaging money, but now it's profitable, and you could see some major numbers coming out of Alphabet. So we're going to talk about that. Joel PM says Microsoft is also another major cloud computing giant that is going to be reporting this week. You are correct. I do not know how I forgot about that, but you are 100% correct. Now, Microsoft, when they report, we're going to get a clue into how their cloud computing unit is doing. That is the Microsoft Azure Cloud. Those are the 3 major giants. So, as we think about the main, I'm just going to say broadly products and services that should drive not only the US economy, but the global economy over the next decade, it's things like AI, cloud computing. I would throw enterprise software in there, and I would say energy, the energy business. We wrote a big article about nuclear energy, and there is going to be no AI, There will be no artificial intelligence. There will be no cloud computing if we don't have the energy means to support these projects. And that's why you're seeing, speaking of all these tech giants, you're seeing the likes of Amazon, you're seeing the likes of Alphabet, and you're seeing the likes of Microsoft all make investments into nuclear energy startups or businesses, or even just signing contracts to get energy from these major nuclear power companies to power their data centers. So very important. So those are the main things we're going to be watching this earnings season, because it can kind of give us a test and a gauge in demand for AI, for these services. So I am very excited, frankly put. I see Ibrahim Azam is in here. What's going on? Alan, cheers, it's like crypto mining on steroids. DC322, thanks for joining us. Peter, good to see you. Western Mass Dave, Who Dat Dave is here. Patrice 2020, thanks for joining us. Paul says, hey Tom, what's going on? I hope everyone is well. I'm doing pretty good. I'm very happy about the weather. It's not too cold in New York, which is very good. Adam Luke says, doesn't taxing of unearned profits throw cold water on your predictions of not much changes in a Dem victory? So Adam, are you referring to the taxing of unrealized gains? Is that what you were referring to? So here's my take on that, and I think it's important to talk about it. Now, it is true, right, that there were some people in the Democrat Party, President Kamala Harris, I believe she came out and said that she would be in favor of taxing unrealized gains. However, after reading into it a little bit more and really waiting a few weeks, I call it the fog of war, to pass. It seems as if a lot of people in her inner circle and council has kind of talked her out of that idea, because it's just absolutely ridiculous, and it would never work, and it would never come to fruition, by the way. There's no way they would ever get that passed. So it is of my view, as we're walking outside the Essex House, that is just a non-starter. So I don't view it as a threat. I don't think it's going to happen. There's no way ever on earth that politicians in the United States would pass anything that would mandate the taxing of unrealized gains. It's just impossible to operate like that. It'd be very, very impossible. That's my view. Shrek says, Tom, what's your take on how much the president influences the economy? Not much. That's broadly my take, not much. Yes, the fiscal side of the house does drive economic growth, right? But overall, again, in my view, what's more important than the fiscal side of the house is really the monetary policy side of the house, right? That is set by our good friend Jerome Powell at the Federal Reserve, which we're going to hear from him in a little bit. And liquidity drives asset prices, right? When we hear about, and one could definitely make the argument that, hey, why has asset prices performed so well over the last decade, right? Why has U.S. GDP growth been extremely, extremely strong over the last, I would say, decade, and especially over the last 2 years, right? If you guys look at the GDP Now estimates, just go to the GDP Now website. All of the experts and all the economists are actually revising their full year estimate outlook for 2025 GDP higher, right? Last quarter's GDP growth was revised higher to 3% annually. And much of that could be attributed to the massive, massive amounts of government spending, right? Look where our national debt is. I believe we're about $35 trillion and growing. That puts a massive bid under the economy, right? Government spending, government subsidy, that drives a lot of job growth, drives a lot of economic growth, all while we've had the Federal Reserve, the wind, I should say, of the Fed in our sails. The problem we have now, right, is if Trump gets in office, or if the current Vice President Kamala Harris gets in office, are they going to do the right thing and dial it down on the government spending? But that will be at a cost, right? It just will. It will be at a cost of economic growth. And I think where we are now in the political spectrum, in the political environment, it's all about the scoreboard, right? Nobody really wants to do what's right for the country, because then everyone would say, oh, look at the stock market. It was higher under Trump, or it was higher under Kamala, than this and that. So they're going to gas this thing, right? They are going to get, whoever gets in, and especially if Trump gets in. I mean, Trump is a real estate guy. He's a debt guy. He is going to turbocharge this thing. And that means spend ungodly amounts of money. That is my view, to try to have us grow out of this mess. And I think the Harris administration would do the same. So I remain very optimistic on markets, particularly U.S. equities. And I think that, kind of opposed to what Goldman Sachs has been saying, right? Goldman Sachs thinks that over the next 10 years, US equity returns are going to be quite muted when in comparison over the last 12 years. I don't think so. I think we'd probably match the norm or even have even higher returns. That's kind of my view. So someone may say that I'm crazy. Some of you may say I'm wrong. And my rebuttal to that is maybe I am. You know, I don't know everything. I'm just making a bet, a directional bet on the market. Who Dat Dave says Trump discussed getting our debts down dramatically, and he is so forward thinking. He even talked about the danger of being underlevered. Yes, but the reality is, right? It is true that Trump has talked about, I forget what the word, right? Doge is the acronym or something. I forget. And he's going to have Elon Musk lead that up to trim a lot of the fat in government organizations and cut out a lot of the waste, which I agree. But you're going to have to do that very, very slowly, right? And I'm actually in favor of that, by the way, just in full transparency. There is so much government bloat, it's ridiculous. The same thing that happened in corporate America, right? But the thing that happens in the private sector is you are at, I'll rephrase it like this, okay? If you're a publicly traded company, I always like to use the example of Facebook or Meta. And if you're not performing, and if your employee size has more than doubled, but your earnings and your sales are tapering off, well, the board of directors is going to be pretty pissed off, and they're going to pressure the CEO or kick him out, right? And this is exactly what happened with Meta, right? If you remember, Meta's stock was down 70%. I'm not sure if you guys remember that. If you go type in the ticker symbol META, during the 2021 through 2022 brutal bear market for tech, Meta stock was getting crushed. And essentially the board went to Zuckerberg and said, look, you either fire half your employees and get back to your core business and get back to growth, or you're out of here. And guess what happened? On the next earnings call, this is right outside of the Nordstrom building, by the way, Central Park Tower, Zuckerberg came on the earnings call and said, we are going into a year of efficiency, to use his words. He fired, I think, a third of the company, more than a third of the company, and returned to growth. And now the stock is at all-time record highs. I think Meta is reporting earnings next week, by the way. Now, the reason why I bring that up is you may think I'm rambling and like, why does that make sense? Well, it makes sense, and it's important to understand that because there's no accountability on the government side. Right, you could have these government organizations grow so big, right? All of these administrators who sit around and do nothing all day, right? And I'm not trying to be harsh, I'm not trying to be mean, but it's true. I mean, you could easily, in my view, trim about a third of all government employees, and we wouldn't notice a difference in our everyday life. Where you would notice a difference is a major spike in unemployment, and you can't just kick these people to the curb. You need to either give them some sort of severance or off-ramp to allow them to assimilate back into the private sector. So yes, it is true that Trump and Elon has talked about the efficiency, government efficiency, and cutting useless government jobs. But the reality of the situation is they're going to have to do that a lot slower than many people expect. That's kind of my view on it. Hey, Rocky is here. What's up, Rocky? I see Al Baker, Angel. Says, hola, Mr. Thomas. How are you? I'm pretty good. How are you? How are you? Reggie44 says, private has to change. Government keeps spending and wasting. Politicians are gutless. Words as you think federales have the same. Shareholder accountability, hell no. I don't. I think you may have missed our entire point of the conversation. But we'll see. I mean, the question was, what is my outlook on the market? I'm very optimistic on the market. And I think regardless of who gets elected, being that we're going to have pretty consistent government spending and a loose monetary policy, not just in the US, you got to understand, and we wrote about this, right? We are just entering not even inning one, like pre-inning one. We're in the preseason of a new bull market in global liquidity. Right, you have the two largest central banks on planet Earth, the Federal Reserve and the PBOC, starting to ease at the same time, right? So it's very important to acknowledge that, and you really don't want to be, I should say, net short the market when you have estimates for US GDP getting revised higher while the two largest central banks on Earth are easing at the same time. Now, if you want to talk about what's going on in China, it's not good. I mean, their economy is in shambles, their real estate market is in shambles. So the PBOC, the People's Bank of China, is really doing everything they can to put a bid onto the market, right? They're doing things like offering free loans, risk-free, to public companies to go in the market and buy back stock. I mean, think about that. The communist CCP, okay, is actively encouraging companies, Chinese companies, to buy their own stock with central bank money at no risk, okay? Number two, on all existing mortgages outstanding, they are cutting interest rates by 0.5% on all mortgages outstanding. That's tremendous. That's going to lead to just an ungodly amount of stimulus. And I think the Canadians just cut interest rates last week, if I'm not mistaken. I'm not sure if we have any Canadians in the chat, but I'm pretty sure Canada started to cut as well. Hey, I see Hang with Mark Mom is here. Thanks for joining. Joe E. says, good evening, Tom and crew. Hope everyone is well. Thanks for joining. JK says Canada did cut rates. Precious says if you're still in New York City, you can't call yourself a conservative. Okay. Fun feeds, awesome, good to see you. Reggie44 says I hope you're right, Tom, but I feel a huge correction. Look, even if there is a correction, right? Which actually, let me rephrase that. It's not if. There is always going to be a correction in the market, right? But the question is that correction going to be bought? And with all of the economic indicators and the corporate earnings that we're looking at, we're going to find out more this week, right? When we hear from all the big tech giants, that dip in the market will probably be bought up, right? We're coming off a higher than expected GDP print that has now been revised higher to 3% annually. 86% of all companies that reported earnings this earnings season so far beat expectations by about 6%. And we're about to hear from all of the major, tech giants. So, and you have the monetary side of the house and global liquidity ticking up. So we'll see. And the magic elixir. Most people are very, very negative and bearish on the market, which is really adding just rocket fuel and jet fuel to the market. There are so many people that are underinvested this market, it's crazy. Like if somebody were to tell you, hey, we're gonna have one of the most polarizing presidential elections in history, I think we'd all agree on that. Whether you're a Trump guy or you're a Tim Walz guy or, a Kamala Harris guy, girl, whatever. We could all agree that this is the most polarizing election in US history. And this is on track for the strongest S&P 500 performance in an election year in history. Crazy. Which means the market likes to climb a wall of worry. You know, markets are designed to confuse the vast majority of people, the vast majority of the time.
I dare you.
Actually, the ghost does steal the
JK says futures are ripping green right now. Hang with Mark Mom says, Tom, yes, very strong. Never realized a 37% growth. Very nice. Yeah, Prussia's time is running out for places like New York City to get their act together. That's just the reality. Well, I think we're very optimistic on New York City, and we're actually shopping deals here right now, particularly on the commercial side. I would say you buy this pain in New York City and you buy this pain in San Francisco. There's a lot of really, really good properties that are being sold at foreclosure auction right now that are going to be bought for probably, 50 or 60 cents on the dollar, maybe a little less, maybe a lot less. And those are going to be great investments. If you want to talk about, specifically the commercial real estate market, the demand is very, very high for a Class A office tower product, and you're commanding rents at all-time record highs. And that's just the truth. Oh, by the way, Wingstop, ticker symbol WING. This has been one of the greatest performing stocks of the year, this company right here. But that's the reality. I mean, you're talking about $87 a rentable square foot. That's the average. At the high end, right, when you talk about places like One Vanderbilt, 425 Park Avenue, all of these new Class A that's going up, they're commanding upwards of $200 per rentable square foot. That's freaking insane. The problem is, it's all of the older, 1970s and 80s office towers that are really getting cooked because companies are not renewing their leases and they're willing to pay up. So they're willing to pay a premium to pay more money for less square footage in a nicer building. I just found out the quantitative hedge fund that we always talk about, D.E. Shaw, I actually used to work one floor below them at 1166 Avenue of the Americas. Did you guys know that D.E. Shaw has now relocated from 1166 Avenue of the Americas, which is the Marsh McLennan building, and they are now in 1 Manhattan West? It's just another example of these firms moving to high quality office products at the Hudson Yards. For those of you who don't know, 1 Manhattan West and 2 Manhattan West are those two massive, beautiful, beautiful office towers right at the Hudson Yards, right behind the Moynihan train hall. That is where the market's moving. So the point I'm trying to make is, as those older office towers become vacant, they'll probably be sold. I mean, if people are really underwater on these deals, maybe they'll just either give it back to the bank or they'll get sold into foreclosure auction, in which case developers can acquire these properties at fire sale rates to be able to invest significant amounts of money into them to maybe build new housing. Maybe they do a condo conversion project, or maybe they just demolish it and build new product. So it may sound crazy what I'm about to say, but the crisis that is going on right now in commercial real estate in New York City could potentially be the one thing that solves the affordability crisis in New York. I know it sounds wild, but as these office towers become increasingly vacant, they're either going to be repurposed or they're going to be torn down and make way for new residential product. And the only thing that's going to bring rents down in New York is more supply. It's basic supply and demand. That's why New York City real estate tends to go up over time, because it's so difficult to build anything here. It's very, very difficult to build. Hey, Brad's Brains is going to be a wild week with earnings and the election lead up. Indeed it will. I even think Bitcoin caught a little bit of a bid today. I think Bitcoin is back over 67,000, is that correct? What about gold? Where's gold at? I think gold futures are trading just a tick under $2,700 an ounce. I'm really, really interested to see how gold acts on election night. Someone says gold is bombing. If gold corrects to the 50-day, I think that's a buy. Wow. Gold 27.44. 27.50. Holy crap! It's on its way to $1,800 an ounce. It's nuts. Hey, what's up, Chris Thompson? What's up? Hey, what's up, Melissa? Did anybody watch that interview with Paul Tudor Jones we were talking about the other night? Come on, let's go by this tower. This is a very interesting one. But we were talking about this interview, I believe that PTJ did with CNBC, or maybe it was Bloomberg, I forgot. But he kind of said the same thing as our thesis, right, that we've been talking about in the chat, that regardless of really who gets in, it's going to be very, very difficult to manage the debt problem, in which case we're going to be forced to grow our way out of this. So government spending is going to continue to go up, in which case, this is 242 West 53rd. For some reason I thought this was 250. Anyway, I guess it doesn't matter. Long story short, he said he'd be long gold, Bitcoin, and commodities. He even said something quite interesting, that kids nowadays, like the younger kids, the younger generation, are starting to use like the triple Q, NASDAQ, very tech-heavy indices as kind of like that inflation hedge. King says BRICS will destroy the US dollar. A lot of people have been saying that. I think I'm going to take the opposite side of that trade. Now, I don't know if I'll be right. I think I'll be right. But in my personal view, I think that BRICS is a total non-issue. I think it's a total non-issue, in my view. Anyway, if you guys are enjoying the live stream, feel free to leave a like on the video and click the subscribe button if you're new. If you like kind of these conversations that we have about the markets, I do write a free investing newsletter for the chat. If you scan the QR code on your screen and punch in your email, it'll take you to our Substack. I just sent out our latest report last Thursday, and this Thursday we will be sending our most updated report just before the election, so you're not going to want to miss it. You could scan the QR code on your screen and punch in your email. Yeah, DC322, I was saying the same thing. This Lexus is having a really difficult time parking. It's pretty much on the curb. Hey, the Mighty Bull, what's going on? Brad's Brains, BRICS shouldn't divert your interest away from this market and your dollars. Hang with Mark Mom says I'm old and still kicking it with aggressive investments. Yeah, I mean, some people are saying that the appropriate thing to do is be long bonds. I don't know. I'm not too sure. I mean, what do you guys think about that? Hey, what's up, Phil? This is Hello Tom. Hope to be taking my family to New York City for the first time next summer. Wow, well, you're gonna love it. That's good news. Very cool. If you need any help planning the trip or need any recommendations on where to go, feel free to send me an email. Here's the Ed Sullivan Theater, the Late Show at Stephen Colbert. King Gerbo says, hey Tom, what's going on? Cheers to you. Quan says it's going to take quite some time for those countries to fully de-dollarize. They're not going to, it's impossible. It's impossible, it's not gonna happen. The reason why you're seeing a lot of this, particularly with the Saudis, it's gonna go back to normal and everything is gonna stay on a dollar standard. Their contract is up and they're just doing it as a negotiating standpoint. But I think BRICS is a very, very major non-issue. You know, that'll be an interesting poll to do. So who here in the chat thinks that BRICS is an issue and is a threat to the dollar, and who thinks it's not? Honestly, there's no wrong answers, right? I mean, nobody knows. You know, nobody actually knows the right answer. I'm just making it a guess myself. But who in the chat actually believes that BRICS is a threat to the dollar? The LT Prods is not. Mark Francis is no issue. JK says nada. Prussia says don't be blind to the strong link between BRICS and the price of gold. So I'm seeing most people saying not. Patrol says not a risk, but an option to hedge. KK says I'm thinking it's going to be a threat. A lot of people saying nope. Yeah, I mean, it'll be interesting, you know, not to get too deep in the weeds, but I'm not a conspiracy person, but what backs the US dollar, right? Many people say, you know, the dollar is backed by nothing. You know, we print all this money, it's a phony, it's a fake. Not true. The might of the US dollar is backed by the US military. You know, not to be, but that's the case. And it's gonna stay like that for the foreseeable future. And I'm not making a claim that that's what I want, by the way, right? Selfishly as an American, I do, but I'll say this. We will know 100% if and when the US dollar is in jeopardy of being dethroned as the world reserve currency, because we'll be in World War III at that point. We would launch massive war globally. That's kind of my thinking. So we'll know it. If BRICS is an issue, you know, whoever the head honchos are in charge of the country, they'll probably launch all-out war. Now let's kind of shift gears here, everybody, and let's briefly talk about earnings. Right? We talked about a lot of stuff tonight, but next week is a very, very important week. Right? The S&P 500 I think was down about 1% last week, maybe fractionally. But the market moving catalysts for the S&P 500 are happening this week, okay? The vast majority of the market cap are concentrated in these big tech conglomerates that are going to be reporting this week. We're going to have Amazon, we're going to have Meta, we're going to have Alphabet, Microsoft, all reporting earnings. What do you guys think? Do you think we're going to get better than expected numbers? Financials came in fantastic, right? We just finished the earnings season on Wall Street for the major financials and the investment banks. They came in much, much better than expected, which leads me to believe big tech is going to come in much better than expected. And when we hear from a lot of the consumer focused businesses, they'll probably come in a lot better. JK says regional banks took a hit. Yeah, but the thing about the regional banks, my bet on the U.S. financial system, in my view, unfortunately, and this actually isn't good news, but this is my view, it's probably going to head towards what it is in Canada, where you have like a handful of major banks and then nothing else. It's going to be a massive, massive consolidation, and you're going to see more bank failures one after the other, concentrated into regional banks, and then they'll be absorbed by Jamie Dimon, Goldman Sachs, Brian Moynihan at, Bank of America, and that's probably what's going to happen. And you're going to live in a United States where you have, 5 or 10, actually not 5 or 10, 5 to 7 major players, and that's it. I think the regional banking sector is probably going to get cored out, hollowed out, and given to Jamie Dimon on a platter. That's what I think. This is 6th and a Half Avenue. Hey Tom, are you a Yankees fan? They are in the World Series. So it's the New York Yankees and the LA Dodgers, right, in the World Series this year. I was watching Game 1. I think the Yankees lost. It's quite nice in here, isn't it? Joel PM says ADP earnings should give a clue on the real jobs numbers. Yeah, ADP and also companies like Paychecks. But you're correct, that's a really good point. Now, speaking of jobs numbers, aren't we getting jobs numbers this week, I believe? That was 6th and a Half Avenue. Really unique, right? Such a cool place. Now, Netflix did really good when they reported, gapped into new all-time record high territory. Let's walk back over to 6th Avenue. JK, it would have been cool with the Mets, Yankees, what do they call that? Subway Series? Now, another sector that's been doing really well is hospitality. This is the brand new Hilton Hotel. Well, it's not new, it's brand new, remodeled. They did a really, really good job on the renovations here after COVID. Fantastic job. And I think Hilton stock, ticker symbol HLT, is trading, I think, into all-time record highs, or at least at a 52-week high. And so is Hyatt. So it seems as if people are out and about and spending money on leisure, hospitality, travel. if I'm not mistaken, I think Pershing Square, which is Ackman's hedge fund, I think he has a pretty sizable stake in Hilton. Hey, what's up, Ace? This is one of my favorite shots on 6th Avenue, looking all the way down. Well, if you look close enough, you can see the World Trade Center, the spire. Sonny H. This is how is the real estate market looking in the near future? Well, I think everyone can kind of comment on that, because the real estate market is very niche specific to geography. But in general, I mean, if we look at the NAR data, which is the National Association of Realtors, deals are not getting done. We have the lowest transaction volume for existing home sales since the 2008 financial crisis. There's lower mortgage demand than at the very depths of the lows of the 08 crisis. Look at this Tesla Cybertruck. Love that Cybertruck. So the problem with the housing market, right, the reason why deals are just not getting done is because really of a twofold thing that I see. Number one, I think there's just under 40%, I think it's like 39% of all homeowners in America, they have no mortgage. So they have no debt on their home. So if you think about all of these people calling for the next subprime home loans all at once, so it's kind of difficult to default on something that you don't have, right? If a lot of homeowners, right, 39% don't even have a mortgage, they have 100% equity, well, it's very hard to default on that. Number two is the vast majority of people, I think it's over 90%. I think if you do have a mortgage, about 90% of those people who do have an interest rate below, what's it called? Below 4%. So deals are not really getting done because people don't need to fire sale their assets. That's really been the problem. Right, and I've been dealing with this here in New York City. You know, if I'm working with a seller and they want to get, let's say, $3 million for their property, right? They have a 3-bedroom, 3-bathroom apartment in Tribeca. They want, you know, $3.5 million for it. I'm like, well, it's probably not worth $3.5 million, because if you have buyers in the market and they're doing the rent or own calculation, they could probably rent a 3-bedroom, 3-bathroom apartment in Tribeca for $12,000 to $15,000 a month. But if they needed to buy and take on debt to purchase that home, at $3.5 million, their monthly payment is going to be $20,000 to $25,000 a month. So it turns the deal upside down. So when you do that calculation, is it more advantageous for me to buy or rent? Most times at these prices, it's more advantageous for people to rent. And I'm not saying in all cases, but in many cases, the sellers just don't care. They're very, very wealthy, particularly here in New York City. They have the property paid off, and they're like, meh, I'll put it on the market. I'll let it sit for a year. If it doesn't sell at the price I want, I'll take it off the market and put it back on the market when I can get the price that I want. If you get lucky and you find a seller who really needs to, you know, hit the bid, so to speak, and sell, then yeah, there's negotiability. But at the very, very high end, and the data shows there's just not a lot of transactions being done. And I think that's going to lead to a real culling of, I think, agents, like real estate agents, because judging from the data, most of them aren't making any money, like zero. The LT prods is banks are not giving away money like they did in 2007. Yeah, I mean, underwriting standards improved significantly. Guys, what do you think of this? We saw this the other night. We're now outside Radio City Music Hall. Check this out. We're on the corner of West 50th Street and 6th. And you have the Christmas tree already up on top of Radio City. I think it's a little bit too early for that. I mean, what are you guys seeing in your neck of the woods, in your territory? Is the real estate market softening a little bit? Are prices, finally coming down? Prussia says, unless we unwind corporate ownership of homes, we're going to have problems. Maybe, but I think that talking point has been a little bit exacerbated, I should say. Because many people think that, the reason why housing is so expensive is because BlackRock and Blackstone come in and buy up all the homes. If you look at the data, that's actually not correct. Yes, there's institutional ownership of single-family homes, right? You could think about a big REIT like Innovation Homes and the like. But the vast majority of single-family homes in America that are used as investments are owned by mom-and-pop investors, which means they may own like 1 to 4 homes. So people like me, and people like you in the chat. We don't own 10, 20, 50 homes, institutional size. We may own a few, and we may use that as investments, but Patrol says my rent is what it is because it is what I think I can get. Brandon says I have fractions of Bitcoin, purchased $300 worth during the pandemic. Well, fantastic. You must be feeling pretty well. Precious is a very strong market in my area in the southeast. The real problem is the property taxes. That's the thing that kind of is the worst. And I've said this before, and I want to know what you all think about this. When you first buy a home, right, or any piece of real estate, and it automatically goes up in value, a year, 2 years after, oftentimes many people think, they're very happy about it. They're like, wow, I'm making all this money on paper, right? Maybe I made $200,000 on paper, $300,000. But the problem is your property tax bill also probably went up a significant amount. So unless you have access to that equity, right, or the liquidity, right, you just bought yourself higher expenses. That's kind of what's sucked, right? So on my property that I rent out, yeah, it's great that my property value pretty much doubled, like almost exactly doubled. But so did my property taxes and so did my insurance. So yeah, I guess you could feel happy that you made money on paper, but if you're not gonna ring that register or sell the property or access the equity, you just bought yourself higher expenses. At least that's the way I think about it. So I would rather buy something and have the market not move for the first 10 years that I own it, and then when I want to sell it, have it go up in value. But obviously that's not realistic, right? Nobody can time the market. I'm just saying, if you buy something and it goes up in value automatically, it's like, damn. You know, I have to give the government another $2,000 a year. It sucks. Brandon, this is Tom. I'm in Illinois, Crook County, and our real estate taxes went up. Has anyone's real estate taxes went down across the country? I mean, pretty much anywhere you are in the United States, I feel as if property insurance and property taxes have gone up. JK, this is Tom. I pay $30,000 to $48,000 a year in property taxes. That's insane. How many square feet is your house? Allen's County appraisers came by recently, and somehow a house in my neighborhood increased $90,000 with zero improvements. Yeah, I would fight that. I would try to fight back against that. That's ridiculous. The LT Prods is my town. Oh, they outsource the appraisals. Yeah, Brad's brains, what's kind of crazy is that in the 70s and early 80s, people paid 12, 13, 14% interest on mortgages, and they still did it. That's true, but I think if you look at the amount of income, what's the ratio? The income to debt to income ratio? Homes were obviously a lot less than in comparison to salaries. So not only were homes much, much cheaper, but in comparison to the salaries, you know, it would make them a little bit more affordable to be able to do it. That's why, you know, we always hammer on this show that it's so important to own assets, right? I mean, if you think about, you know, the wealthiest people in your life, right? The people that you know, maybe your friends, maybe your brother, maybe your sister, if they have money or they have net worth, they probably own assets, right? They probably have things, they own things that they either buy to rent out. It's just the name of the game, right? It's very, very difficult to earn and save your way to wealth. You have to make money, and you have to go back out into the marketplace and deploy your capital and essentially have your money work for you. I mean, I could only imagine, right? Let's fast forward to when I'm 70 years old, right? I'm 29 years old right now. Imagine what a starter home is gonna cost when I'm 70 years old. Like, if I'm gonna be helping out my grandchildren, you know, buy their first home, or, you know, put a down payment on their home, I don't even wanna think about what a starter single family home is gonna cost when I'm 70 years old. It's gonna be crazy. I mean, when my grandparents bought their home, I think they paid, what, $17,000, maybe $18,000. Now a starter home on Long Island is like $590,000, and you have to do significant investment. You have to do significant improvements to the product. If you want something turnkey, move-in ready on Long Island, you're gonna have to pay a 7 handle. You know, it's gonna need to be $700,000 or more. Someone says you have no idea how much the world is going to change in 20 years. That's also very true. You know, thinking on the optimistic side of the equation here, AI is going to drive costs down, and if we believe what Elon Musk says, we are going to enter an age of abundance where there's going to be no shortages and no scarcity of anything. But imagine if we have a bunch of Tesla Optimus bots running around everywhere, doing everything for us. I mean, it's probably going to drive the cost of many things to near zero. Anyways, if you guys are enjoying the stream tonight, feel free to leave a like on the video and click the subscribe button if you're new. Alan says 3D printed homes are a thing. I've actually been doing more research into it. I saw things like that too, like the stand-up, like boxed homes. Well, I think we also, I mean, to Alan's point, what's important to understand and realize is there is enough land in the United States. I'll rephrase it, right? There's more than enough land in the United States for people to build homes cheaply. The reason why builders don't build is because they can never sell the homes there because people don't want to live there. I think we also have to have that conversation too, right? If we're going to be honest, the reason why real estate in San Diego, California is so expensive is because everyone wants to live there because it's gorgeous, right? The reason why, you know, New York City real estate is so expensive is because everyone wants to be here. All the job opportunities are here, right? You could say the same thing about the Silicon Valley, San Francisco Bay Area, right? Real estate is very expensive there because that's where all the jobs are. That's where people want to be. Like, you can still buy, you know, let's be clear, you can still buy, you know, a 5-bedroom colonial home in, you know, a random small town in upstate New York for $100 grand. That is also true, right? But the problem is no one wants to live there. I mean, if you don't care where you live, you can live very cheaply in the United States. That is also true. But if you want to live on Park Avenue, if you want to live in Central Park South, you're going to need some cash. HCB says, no, you can't. Hey, no, you can. If you look at some of the small rural towns in upstate New York, you can buy a colonial home, you know, an older home, for like $100,000. Yes, you can. Yeah, Brad's brain. This is Tom, you're 29. I thought you were 27 or 28. Big 30 next year. Yeah, that's true. The big 30. I will not be in my 20s next year. It's crazy. It's wild. And the only reason why I know that, by the way, is because I was going to buy a few of them and rent them out. But the rents are like nothing. The rents are like $800. So it's not worth it, and the taxes are very high in those type of communities. 456 is you can buy a house in Illinois for $70K or less. Yeah, so I mean it's not a problem, right? But when we talk about affordability crisis, it is true, right? I'm not trying to downplay the problem. I don't like to victim blame or downplay the issue. But when it comes to it, you can still buy homes in the United States, and you could live in the state of New York and you can buy a home for $100,000. I mean, the job opportunities will be pretty much nothing, but maybe you work remote, right? If you're allowed to work remote and you don't care about living, you know, 6 hours north of the city, you could do it. You could buy a home up there and live, you know, normally. It's gonna snow and it's gonna be cold, but check this out. Beautiful view of the Empire State Building tonight. Wow, Jake from Florida says, Tom, I'm closing on 2.6 acres near Ithaca Tuesday for $20,000. Wow. Well, congratulations first and foremost. And I think that's going to be a good investment for you, to be honest, because Ithaca is, I was about to say the old cliche, Ithaca is gorgeous, for those of you who have been to Ithaca. But it's not that far away from the city. It's probably like, what, a 4-hour drive north? And there's really, really good colleges there. You have Ithaca College, you have Wells College, and you have Cornell University, which is an Ivy League school. So I think that's a pretty good buy, having land in New York State, north of New York City. Now, I think I brought this up 1,000 times on the stream. I mean, we do have new people here, so maybe some of you haven't heard. But if I had the money, right, I think the biggest play, and the land is very expensive up there, but if there's ever, you know, a correction, I would be buying up land all in and around and surrounding the Finger Lakes in upstate New York, particularly right on Skinny Atlas Lake. I'm not sure if anyone's familiar with that, but the Finger Lakes region in New York, it's like a 5-hour drive north of New York City, and it has some of the cleanest water on planet Earth. Not even the cleanest water in the United States, the cleanest water on Earth, right? Some of it. You know, Skinny Atlas Lake is one of the cleanest lakes in the United States. I would say buy land, if you can accumulate land in the Finger Lakes region of New York. That is fantastic. I mean, at some point in my life, I probably will buy some land up there. But that is a beautiful area, if anyone's ever been there. There's a few big hedge fund guys in New York City that have like summer homes right on the lake up there. It's beautiful. It's like really, really nice up there. Oh wow, RB says I have a friend there in wine production. Loves it. Oh, that's right. There's a lot of, I think there's some big vineyard right there, like just north of Skinny Atlas Lake. HBC, Skinny Atlas isn't cheap already though. It's the most wealthy of them all. Exactly. But I think it's going to get even more valuable. That's a very, very nice area. You can grow your own food. The lake is clean. It's just that it's freezing in the winter. It's almost uninhabitable in the winter, but oh, that's right. Someone says there's a big chip manufacturing business coming to Syracuse. Now, I saw an article. I don't know if it was fake news or not. I didn't want to jump to conclusions. Maybe some of you in the audience can confirm or deny. But is the Taiwan semiconductor manufacturing plant in the state of Illinois at higher production or capacity than some of the plants over in Taiwan? Again, I didn't even have enough time to read the article. I just like saw the headline on X. Anybody else hear that? What's like the actual story? I didn't have enough time to read into it, but that's a huge win if that's the case. But you know, I have a rule with social media, particularly on X. I mean, I love the X platform, but if I see something that seems too good to be true on X, I automatically assume it is, and then I wait a week. This is the Bank of China here. Hey, what's up, Kathleen? Hope you're doing well. DC322 says domestic production of chips and semis. If someone wants to put the article link in the chat, feel free. HBC says, Tom, the federal government has agreed to provide Micron Technology a $6.1 billion grant to build a massive complex of computer chips, chip plant in Syracuse's northern suburb. I heard about that a while ago. What's the status on that? See, the thing about the, the Chips and Science Act, generally speaking, I agree with the premise. I think it was very, 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 very positive that we did that, because if COVID, the big C, taught us anything, it's that we cannot rely or have any of our critical supply chain infrastructure anywhere near China. Okay, I'm just going to say it. I don't care if it's not politically correct. It's just the truth, and the government agrees. Okay, why do you think the government is spending billions and billions and billions of dollars in subsidies to have these chip companies build and manufacture here? Because what's been happening is the U.S. has always really been the leader in chip design, but it hasn't been profitable for us to manufacture anything here. So hopefully that'll change. I think that's very good. Oh, Terry says, I'm in a suburb south of Buffalo. Love that. Hey, what's up, Patrice?
Because everywhere else,
Nina, welcome. This is that new building that's going up right here on West 37th Street. Terry says the winters are brutal in Buffalo. I give you guys a lot of credit for putting up with it, though. Who dat Dave? Yeah, Taiwan Semi is the cream of the crop. They also reported a blowout quarter, too. I think 2 weeks ago, maybe last week. TSM, ticker symbol. Esmeralda, what's going on? Good to see you. RB, you gotta head down to Miami. Or are you already in Miami? I forget. Jules, good to see you. Thanks for joining. Always a pleasure. Any Halloween parties this week? Not for me, but I'm sure there's going to be a lot of crazy stuff going on in the city. I totally forgot about that. This week is Halloween, right? Totally forgot. Yeah, we'll be out and about in it. We always try to go to Washington Square Park on Halloween. It's always crazy there. Patrol says I'm headed to Miami this week. Enjoy it. I just got back from Miami. I think the next time I'm going to be in Miami is the day after Thanksgiving. Miami is just a fantastic, fantastic place. Here we are outside of Herald Square. But if I had to make a fun prediction about earnings next week, in terms of the big tech companies, I think you're going to have the biggest beat from Meta. So out of Meta, Alphabet, Microsoft, and Amazon, I think you'll have the biggest earnings beat by Meta. That's my prediction. Go to 34th Street. Look up at the Empire. What are futures doing? S&P futures, NASDAQ futures. I think someone said we were substantially higher. Wow, RB. So all of your adult life you're in Miami. Love that. I didn't get a chance to go up to Sunny Isles Beach and check out the St. Regis construction site. I don't even know if they broke ground on that yet, but wow, JK says plus 130 points for the NASDAQ 100, plus 30 for the S&P. I don't know if these are Christmas decorations or whatnot, but oh, they do have the Christmas decorations on already. I think that's a little bit crazy, but what do you guys think? Is that a little bit too much to have the Christmas wreaths up already on Macy's? Maybe they're trying to drive sales. I mean, it looks beautiful, it looks really pretty, but I think it's a little bit too early. Everything in Miami, what's up? Looks nice. Let's head over to Madison Square Garden. We'll see what's left over from the Trump rally. You couldn't even move in and around this area earlier today. It was still packed. Oh, Patrol, you're right. You're saying you'll buy my ferry ticket if we ride the ferry one day? Well, I think we'll probably just jump on the Staten Island ferry. We don't have to pay for that. Wow, 10 red buffs, Tom. There were a huge amount of buses around the garden. Or were there? I'm not too sure. We'll check it out right now. once you get to 34th Street, it gets a little grimy. So we're walking over towards 7, and we're gonna make this left. We'll see if they opened up the street. Because 7th Avenue from 34th, I think, till 27th was closed all day today. Guy asks, which part of Long Island am I from? Massapequa. Right off the Babylon line. And we'll see if Tesla can have some follow through next week. Big week for Tesla last week. I think it was the 3rd best week for trading for Tesla stock in its history. Again, we think that Tesla bottomed officially in April. I think the stock is massively undervalued. Yeah, JK says it's an energy firm now, Tesla. Well, the battery storage, energy storage and generation business grew at over 50% year over year in terms of revenue, and the margins are now 30%, or a little higher than 30%, like 30-something%, which is just an absolute cash cow. All right, everyone, we made it to Vernadoville. So this is the brand new Penn Station. This is the Penn 2 project. Now, I think Major League Soccer, or the MLS, just signed a lease inside this building. And I mean, this used to be horrible. JK says gamma squeeze on Tesla. I don't care what kind of squeeze it is. I just want it to squeeze higher and higher and higher. Because I think that's going to be what, you know, the move, I think, and I don't like saying these things because, you know, just too maybe hyperbolic, but the next bull leg cycle in Tesla is going to be the thing that takes you from, you know, bicycle to a house, you know, or I should say bicycle to an airplane ticket, to first class private jet. That's the velocity of that move that's coming. So I would have a position in that. Can't tell anyone what to do. But throughout the cycle, the good thing is everyone technically does own Tesla if you just own an index fund, the S&P. But if you want to have direct exposure to buy the stock, man, it's busy. But these don't seem like Trump supporters. These seem like kids. I can almost guarantee that these are not Trump supporters. Hey, Patrol, thank you so much for your very generous $50 donation. This is doing stuff on camera for Money Fund. Thanks so much, Patrol. I appreciate your generosity. It means a lot. Thanks for supporting my work. Thanks for supporting what we do here on Walks on Wall Street. Appreciate it very, very much. Thank you again, Patrol. Oh, someone says there's a concert coming out? That's crazy. So what does Madison Square Garden stack it back to back? Once Trump goes out of there, another concert goes in. That's crazy. That's wild. Well, good for Madison Square Garden. They must be making a lot of money. Doesn't it look a lot better? I think Bernardo did an amazing job. Let me try to switch to the wide angle camera lens just so you can get a better idea. Hold on, let me switch. So this is the brand new entrance to Madison Square Garden. And that's that new, like, electronic ceiling. It's pretty cool, right? I don't know if it'll be too, let's see how far down we could go without the internet going out. So this is the new Penn Station for those of you who have not been here. It's new, it's clean. Try to walk up and around. Now, if you notice, there's a big empty lot right across the street on 7th Avenue. This is where that Hotel Pennsylvania used to be. And now you can see the Empire State Building. And you can see One Vanderbilt. So it actually makes for a pretty interesting view. I'll take you to the, since we're here, we'll go to the brand new LIRR entrance.
Yes, where is he going?
Now, to be fair, somebody said if you go down the staircase, Penn Station is still in a deplorable state. Only the New Jersey Transit side. When I take you down into the new Long Island Railroad Terminal, it really does look amazing. To give credit where credit's due. But for whatever reason, they didn't allocate any resources to the New Jersey Transit side. I don't know what. Right, this is the new entrance. Okay, NAV 047. What's going on? It's a very cool experience being here, to be honest. All right, let's see how long the internet holds up. Now, Bernardo is a publicly traded company under the ticker symbol VNO. And I think they're doing quite well this year, by the way. All right, let's go down. I'll take you down the escalator. You guys are gonna be impressed. If the last time you've been to Penn Station was more than 5 years ago, you're gonna notice an unbelievable difference. Penn Station used to be an absolute horror show. Now they elevated the ceiling. Everything is all modern. There's all new retail, there's new restaurants. It's pretty impressive, to be honest. The ceiling heights must be, 25 feet plus. You have a Dos Toros, you have Shake Shack, you have a Raising Cane's. Now, we talked about the CEO of Raising Cane's. I think the guy is worth like $8.1 billion. And he pitched Raising Cane's as an idea to his college professor. And his college professor said it would never work and that he shouldn't pursue the opportunity. I think $8.1 billion later, it's pretty good that he pursued the opportunity, I'd say. So just for some perspective here, if you look right here, this is how tall the ceilings used to be throughout the entire station. It was extremely claustrophobic. It was almost like you were hitting your head here. And now, it's just like a whole new world. They did a really, really good job. And there's even more stuff coming on this side too. Yeah, Dock 7's, his Renado's up 119% this year. But yeah, if you're visiting New York or you haven't been here in a long time, I would highly suggest just checking out the new Penn Station because it's pretty impressive. And I think they did a really good job. Penn Station is where the vast majority of tourists come to New York City for the first time. And this is the impression we want to make, right? We don't want to have homeless people all over. We don't want to have, garbage everywhere. We want a modern train station. And this is what we got. So I'm very, very happy about it. And this is the money shot right here. Right as you walk up the escalator, you're greeted with this very big entrance. And you have the Empire State Building right in front of you as you walk out. It's a very, very cool view. So I'll try to go to the wide angle lens just so you can see what I'm talking about. The moment you walk up those escalators, you have one of the most iconic New York views of all time. It's really unbelievable. And then to the right, you have that new entrance to Madison Square Garden. Alright, let's walk all the way over to the Moynihan Train Hall. Now, if you were with us from the very beginning of the live broadcast, we were talking about the New York City commercial real estate market and how, regardless of what you hear on the news, it's actually doing quite well in terms of the Class A office market. If you look at those two huge towers in the back, that is 1 Manhattan West and 2 Manhattan West, those are the two towers that signify the start of Hudson Yards. Now, a lot of those newer office towers are commanding very, very high price per rentable square foot. $150 a square foot to $200 a foot. And there's a quantitative hedge fund, D.E. Shaw, that now moved their office from 1166 right to 1 Manhattan West. So it's very, very cool to see. And this is Madison Square Garden. Seen a lot of pickpockets out tonight. It makes sense. You know, concert gets out, a lot of the pickpockets and thieves hang around, you know, Madison Square Garden, venues, things like that.
Yeah.
NYC TV. This is how can you tell? Oh, I can just tell just by looking at somebody. I can tell very, very easily. It may not seem like I'm paying attention, but I mean, I'm looking alive 360. I know exactly where everything is, where everybody is. It's very, very easy to tell. Like when someone's like, you know, matching your speed, constantly dropping things, or, you know, just like, I could tell. Some of you may say, oh, you're profiling people. No. I could tell. If you live in New York long enough, you could tell easily. And this is a hot spot for pickpockets. My friend Safad, I'm not sure if you guys watch the NYC walking show. Safad's a really good guy, really good friend of mine. He almost got a snatch and grab. Someone, while he was doing his live broadcast here, I think it was a few days ago.
Excuse me.
Just past. Hey.
Sorry to bother you. 9th Avenue is that way?
No, 9th Avenue is one more this way.
Okay, perfect.
Yeah, so this is 8th, that's 9th.
Thank you.
Right near the Hudson Yards.
All right, thank
Yep,
you.
no worries. But anyway, yeah, someone tried to snatch his phone. So you just gotta watch it. I would say pickpockets and thieves are very easily identified in the summer because you'll have people wearing winter jackets or like these, or they'll be like bundled up like they're going to Antarctica, but it's the middle of the summer. Or they'll have like a ski mask on. So it's very, very simple. We haven't been inside the Moynihan train hall in a long time. Man, this view is incredible. Look at this. That is such an iconic New York City shot. Empire State Building, Madison Square Garden. Damn. All right, let's go in here. You're gonna notice a huge difference when we walk in. Pretty cool, right? there's JFK. It's crazy to think that there was a time when every single one of these windows had an employee there. Now there's like maybe two. What we got over here? Peanuts. All right, now we're back. Pretty cool. And the architecture on this thing is amazing. Yeah, Reggie 44. It's back to the chaos. It's really peaceful in there. They did a really good job. Alright, we got a few seconds left. Cross back over to the front. Looks like the EMTs are working on someone. Someone got arrested. That dog.
What's this? Can I buy a hot dog off you really quick? Just a plain hot dog, nothing on it, no bun, no nothing.
Could you imagine getting bitten by one of those police dogs? I think I'd just give in before I'd ever try to outrun one of those things. See, only a handful of arrests tonight. This is the back side of Penn Station, or I should say Madison Square Garden, rather. But if you guys have been enjoying the live stream so far tonight, feel free to leave a like on the video. Click the subscribe button if you're new. We do these every day, usually starting at 8:45. We've been late in the last 2 nights. Sarah said you want us to go to Yankee Stadium tomorrow. Maybe. If we can make it, we'll go up there. But the problem is the traffic getting out of there is too crazy. And the traffic on the subway getting out of there is too crazy. We'll see. Now, the Yankees are playing tomorrow in the Bronx, right? I'm assuming for the World Series. What did they lose 2 games in a row? Now they're coming back to New York City, or coming to New York City, I should say, rather, and then coming back. So. Now, just as a quick reminder, everyone, this Thursday, we will be sending out our next edition of our free financial newsletter. So if you haven't signed up already, go ahead and do so by scanning the QR code on your screen, punching in your email, and that'll take you to our Substack. We covered a lot in the last report. We did a very, very deep dive sector focus. Look at these guys. And into a lot of individual stocks. So it's a good free way to support the channel. Go over to our Substack and check it out. But until then, I think we're going to sign off for the night because it is getting late. So I want to thank everybody for coming out. Appreciate it. We're also going to have video content up on our Substack very, very soon. It'll essentially be me behind the desk in the office, so looking forward to that. But have a wonderful, wonderful week. It's going to be a busy one with big tech earnings, Microsoft, Alphabet, Meta, and Amazon. All right, everyone, hang with Mark Mom. Thanks so much. Snazzy Paradise, Chris Thompson, Alan, JK, Cynthia, Ava, Patrol, thanks again for your donation. Professor Dario, Cynthia, NAV407, Hang with Mark Mom, Alan, all of our moderators, Sabrina Fair, Esmeralda, Joseph Hardaway. Thanks everybody. Have a wonderful, wonderful week. Sally, take care. Western Mass Dave, CJ. We'll see you guys tomorrow. Take care.